Hello, everybody. My name is John Broad. I'm one of the co-founders and the CMO here at Rome. Welcome. It is great to have you here. Thank you. This is the second mortgage panel we've conducted in Rome. Last month, we did an AI in mortgage panel, and we have a number of great mortgage and lending events planned going forward. Format for today is really simple, 30 minutes of basically moderated discussion and then audience. That's you, Q&A. So at any point, please throw your questions in the chat, which you can access in the lower right of your screen. And of course, feel free to react at any time. Thumbs up, laughter, clapping. Thank you. Try to resist throwing tomatoes. I know it's hard. Yes, you can throw them at me. So there. Yes. All right. It's a truly star-studded panel. These individuals need no introduction, but I'm going to give them a quick one anyway. Brian Hale, founder and CEO of Mortgage Advisory Partners. In over 40 years in the industry, Brian has led a ton of major mortgage companies, including Closing Mark, Stearns, MetLife, Countrywide, Wells Fargo, Fleet. I'm sure I'm missing a couple. Apologies. Jonathon Haddad, chairman and CEO of AIM, the Association of Independent Mortgage Experts. He's also the president of Nextdoor Lending, which he co-founded with Doug Liska and recently sold to NerdWallet. And Faris Faraj, co-founder and president of the fabulous Premier Lending. Also, we have a very special surprise guest at the end of the session, so please be sure to stick around. With that, I am super excited to bring out this elite group, but before I do, a very quick word from our sponsor, Rome.
Rome is your virtual headquarters for mortgage teams. It brings your entire company and operating network together in one shared real-time interface. Unleash ultra productivity with a company visualization, presence, drop-in meetings, video meetings, group chats, scheduling, AI summaries, and AI agents. Rome lets you build relationships, scale operations, and close loans faster. Unite your loan originators, processors, and real estate partners in one virtual HQ.
What's not to love about Rome, John? You guys have created this amazing virtual world. Allows for us to communicate with our teammates and team members as if we're in the same room.
It lets us fly through communication. You can see the availability. The AI note taker, Magic Minutes, really just, we rely on that a lot. It captures everything, so we don't have to worry about someone taking notes anymore.
Now being able to develop a little bit of a culture, even though everybody's not in the office.
Good morning, everybody. Jonathon, Faris. My pleasure to share the stage this morning.
Good morning.
Good morning. Well, look, we have a limited amount of time today, so I kind of want to really get into the topic. And, I'm sure we haven't done a ton of prep prior to this, which is the way I prefer to do these kinds of discussions. Clearly, 2025 is rolling out different than I think an awful lot of people in the mortgage industry believed in late 2024, particularly prior to the first Fed rate cut, right? When it looks like rates were coming down and 25 was going to be somewhat of a bailout year. That clearly has not played out that way yet. And my own sense is that 2025 may well still be almost a carbon copy of 24 and 23 here for a bit. So the age-old question becomes, how do you optimize your operation on an ongoing basis to be able to compete? We've seen all kinds of recent announcements, companies acquiring each other. We saw the Rocket, Redfin, Mr. Cooper deal. There's a lot going out there in the marketplace. Jonathon, I thought I would start with you and I think we have a combination of mortgage bankers, mortgage brokers, executives, and originators in the audience today. So why don't we start maybe from a broker perspective, or really any way you want to do this, your sense on, if you had to give somebody advice on the top 2 or 3 things that are in your mind around optimizing a mortgage origination company and process today, what would those 2 or 3 things be?
So, Brian, I thought you were definitely taking me down a different path because I spent my first 6 years at Rocket Mortgage. So I was like, oh, no, he's about to hit us hard right now to start this. So I was like, here we go.
Just by way of context, that's all.
No, you're good, man. So, look, one of the biggest areas, because I did spend time in retail, and I spent time on the big picture, right? What is 10 years down the road? On the broker space, what I found coming in is a lot of us, we weren't thinking 10 years down the road, right? It's like, okay, it was in the middle of COVID when I got into the broker space. Everyone's making a tremendous amount of money. You're thinking about your paycheck next month. I did see a lot of that, just to be very transparent with
I
everybody.
don't think that's unique to brokers, by the way.
No, I think that was everybody in the mortgage space, particularly though on our side, not having, because we don't have a lot of that back end infrastructure from a executive standpoint where they're focusing on 10 years, 15, 20 years. It was simply, hey, we're making money now. Here's what it looks like next month. What I've come to find is brokers are really starting to bridge that gap very quickly on our side. And the reason being is things are becoming more affordable from a data perspective. So from an optimization standpoint, even for us being acquired by a publicly traded corporation, your data and the way you store and save it is unbelievably important. What we find is looking at 1003s, early habits is you do things like 123 Main Street is where the client works. They started on January 1st, 2020. They make an exact salary of $35,000. That's not data that you could leverage down the road because you're just plugging in numbers. So take the time to have the right staff. You can even get virtual assistants now. When this data is dialed in, you can start to build predictive patterns down the road, and it's not going to cost you millions of dollars to do it. But that has to do with how you're doing things up front. And if you're someone like me, right, where I move fast, I'm a salesperson, you got to have that counterpart that will go back and check your work. The data and the way you store it is one of the most, if not most critical thing. That's why you see organizations spending tens of billions of dollars to acquire data. That is what they're acquiring. So think about that. Now, how can you apply it on your scale and help grow and scale your business? So for us, year over year, our pre-approvals for Q1 were up 20% with roughly the same amount of loan officers for outside sales. Why is that? Well, could be bottlenecks. It could be consumers getting more customized to the interest rates being slightly higher. But the reality is we had the data from the year prior and we planned accordingly in December. Hey, follow up, stay in front of your agents. They want to take time off. So the data piece and how you store it is a massive piece on it scaling and growing your business and optimizing it down the road.
That's a great perspective. Faris, I think again, as I mentioned, I think we have a combination of both brokers, bankers, originators, execs. From an IMB's perspective, you've built an outstanding organization. What are the 2 or 3 things that you're focused on this year or you think others should be focused on to optimize their business, and particularly down the origination side?
You got to take a look at it from, it's like a 3-legged stool, right? You got to look at the sales. What are the 3 tactics to improve the sales? Right. You got to look at the margins. What are the 2-3 tactics to optimize your margins? And then from an expenses, what are 2-3 tactics to improve the expenses? So if one is not working, then that stool is going to fall off. So it's really, really important if you want to optimize right now is to get laser focus, not only on sales, but also on constantly looking at those margins, looking to improve it, constantly reviewing the expenses, identifying how many of your team members are actually using the tools. What's a return on those tools? And anytime you're going to be adding a new tool, we should be looking at it from a perspective of, am I getting a 3-to-1 return or a 5-to-1 return? Maybe number 2, is it easy to implement? How easy for implementation? And number 3, do we have the resources and the people power to help us get there? So I think to optimize right now, you got to get all 8 cylinders working. You can't just take one section. You got to be focused on all 3 sections of this business.
That's great. One of the things that in my consulting practice, I do a fair amount of work with folks, helping them optimize. You use the term margins, and I like that term. That's how I think about it. But I just think about it in revenues in general, right? And I think as you look over the last 2 or 3 years, clearly it's been, this is my 44th year in the mortgage business. This has been the most difficult 3 years in my history, clearly. And I remember I was running the biggest division of Countrywide in 2008. So, I've got the bruises on my back to validate that, right? So the point being is, I've seen the industry be, in some ways, myopically focused just on expenses You touched on something that is really near and dear to my heart and where I spend a fair amount of my time with my clients, not just expense, but revenue. And thinking about it from an optimization standpoint, very quickly, there's 374 metropolitan statistical areas in the United States that the government recognizes. You start breaking those into markets. There's about 650 discrete markets around the United States, each one having separate sets of competitors. Big competitors show up everywhere, the Rockets of the world and others. But there are, if you go to Tulsa, Oklahoma, the Bank of Oklahoma is a really tough competitor, right? Kind of in that marketplace. How do you think, Faris, about managing margins and optimizing revenue? Do you price one price everywhere? Do you price one price to all customers? How do you think about those kinds of things? So I think it's a really critical aspect of not just focusing on expense, but focusing on, can I pick up 10 basis points? Can I pick up 25 basis points in revenue so that I can continue to invest in technology and support for my sales team? How do you think about that?
You got to take a look at the data first, and you got to identify what note rates are selling. You got to know your competition. So, you got to know where the IMBs are. You got to know where the credit unions are. You got to know where the brokers are, and make sure that you have a transparent model. I think the challenge with our business is it's not very transparent. So what we've done is we actually publish our corporate holds, and we want to identify what that note rate and identify how we all create a win-win situation. How can the client win? How can the originator win? And how can the company win? So it's not easy, but you got to be flexible. You got to be transparent, and you got to know the data. So for us, it's every market's slightly different. Some markets can afford more. Some markets you may be working with a lot of credit unions where it's lean and mean. So the question is, how do we structure in a way that's transparent to the originators, but also that we can sell that note rate? And sometimes, it's very interesting because sometimes you get that one loans or that one client that has got this very competitive, but that's not the whole market. Right. So identify what's really selling, and there's enough data out there to get us. So it just starts by being more data driven and more strategic on customizing plans for each person.
Right. And I think part of that too, and I assume you would agree with this, your own internal data is almost as important as that external data, right? To know kind of what's happening within your business. Jonathon, do you want to speak to that a little bit, just in terms of the impact of data and revenue management? Obviously, if you just sold, I know the guys at NerdWallet, you just went through a diligence process. Those are always fun. Yeah, exactly. Like getting a root canal, right? So talk to me about how much they were interested in data and your ability to understand your own data.
So you talked about transparency, Faris, and when you're going through due diligence and an acquisition, just know that they are going to see everything. All right, so nothing to hide. They go through that process with a root canal. Right. To his point, it is spot on. So here's a big deal. A lot of loan officers I speak to, whether it's on the retail or the broker side, and this is where the data is important, Brian. When the data is correct and you look at a situation, and let's just say, for example, you have I'll just give you this perfect example. If you look at quarter three, do you all remember in September when rates dropped for a second and everyone said, refi, boom, here we go, everyone's nuts. So people weren't prepared for that. A lot of people weren't. But if you look at certain companies and take, for example, you look at a Rocket Mortgage, that their earnings report came out. Look at the amount of past clients they originated. Of their refinances in Q3, 85% were from past clients. Okay. So what does that tell you? Here's what it tells you. You have an opportunity with the data being correct. If something pops up and it says, hey, potential quarter point drop for a consumer at minimal cost for them. What I'm seeing loan officers is they're afraid to call the client and they're prejudging. Oh, it's not worth it. You don't know what the client is going or not going through. They're struggling as well. Their credit card interest rates have gone up significantly. Their equity has gone up. And a lot of these people feel trapped. What I've found is calling them and at least having a conversation opens up the door. And that's where the data helps you. Hey, here's a potential client. Just call them and check in. Hey, Brian, it's Jonathon Haddad. We actually helped close your loan last year. I just wanted to see how the house, the home has been treating you. Everything been? How are things feeling around the house? Are you feeling a little bit tight with the economy going on right now? The amount of clients that are like, oh, it's so weird you called. I actually just tried to get a home equity, but my credit union said no. because their credit score might not be perfect. Now you can have a conversation about cash out refinances. That's how you leverage the data, but you also can't be afraid to make these phone calls. You cannot prejudge and assume that a consumer doesn't need help without at least picking up the phone.
By the way, look, and Faris talked about this a little bit as well. He talked about having, investing in technology. I know you're a fan of technology. When I talk to CEOs in my consulting business, their number one frustration with their sales force is the lack of adoption of the technology tools that they're providing and investing in for their sales force. So when you think about data, I think people get lost in this concept of data. Data is your database. It's your CRM. It's where your past customers. I have a simple view of this business. You want to make more money faster in the mortgage business, close more of the leads you already have. The leads you already have are sitting in your CRM, which are your past customers. And to your point, Jonathon, when you think about those past customers and you think, the originator kind of psychs themselves out, in the old days before, I was an originator in the 80s, early 80s, in a really cold climate. I used to, if I blew a deal for a realtor, I'd drive around the block of his office praying to God I couldn't find a parking spot so I, wouldn't go in and have to face the heat, right, from the agent. Originators still have this call reluctance capability and not recognizing all the pieces around them. Today, if that customer is maybe only a quarter better or a half better, and you're thinking, here's some other thoughts. We're sitting on $40 trillion of home equity in the homeowner space today. Yeah. Consumer debt is at a record high. Consumer debt delinquency is going up rapidly. The ability to combine not just the mortgage, a debt consol refi to lower the customer's total outlay for the month may well be the deal, but you don't know that until you get on a video call with that customer and do a little check-in and say, look, I have these options. Maybe it doesn't fit, but by the way, do you know anybody who might need my service and those kinds of pieces? That willingness to maybe record a video text, send it to your customer database, get back on with customers face-to-face. I had a guy on my podcast on the Weekly Roadmap, Jeremy Forcier, maybe one of the best converters in the business, right? Mm-hmm. He has a script, he's down, he talks to these customers personally and makes those calls. Faris, how do you think about your originators utilizing the technology stack that you provide? Is that a frustration for you?
We've been preaching this for a while because, if they're not working it, then the servicer is going to work it for them, right? And that's the reality check that everybody's going to start thinking about. They're getting really good on working the data. They're getting really good on the scripting. So if you're not in front of it, then somebody else is going to be. But we're trying to take it a step further. So not only are we going to apply technologies to doing predictive analysis as far as who's likely to sell, who's likely to purchase, any debt consolidations. And when you're getting trigger leads, I don't know if any of you guys have this challenge, but some people don't even call them the trigger leads. And these are the easy ones. These are people raising their hands, they pulled a credit, right. So these are easy calls, they're easy layups, and people just are not, the A players are, but there's quite a bit of people that are not for whatever reason. So we're going to take it a step further where we're going to actually do the outreach for them. We're going to create opportunities for them, lay it up, get a client relationship manager that would actually follow up, set it up to the originator, back to them, just to make sure that nobody else is working our database. So we just found that it's difficult to get 100% of our originators to do it at a very high level. So it's how can we become an extension arm of each other, identify their pain points, and finding solutions to create these opportunities. So right. I'm really big on the data. Again, if you're not mining it, somebody else is.
Let's take data another direction. I'd love to get both of your perspectives on this. One of my hot points when I'm talking to clients, I just gave a presentation at the Housing Wire Economic Summit in Dallas where I touched on this point. When I work with sales forces today, I'm still a little shocked at how little people are utilizing the data services that are out there. And let me just phrase it this way. I always ask heads of production or CEOs, do you know who your sales force is calling on? And as importantly, do you know why they're calling on those referral sources, those realtors, whatever the case may be? And there are, it's Ingenious and MMI and Reader and CoreLogic and all those services that are out there who can identify and target the people who are actually selling real estate. I had a mentor early in my life who, when he taught me to be an originator, and he was the number one originator in the industry at the time, said, look, you have two approaches in this business to make money. You can call on people who are in real estate, or you can call on people who actually sell real estate. Which one do you think you have a better chance on? Jonathon, how do you think about that? How do you think about helping direct originators, or what counsel would you give to people helping direct your sales force on where they should be looking for those opportunities?
Brian, I know we've met like once at the MBA, but it's cool because you said you've been at this for 40 years, yet your interest in data and the way you leverage it. You just talked about doing a video call. You just talked about adapting. You just talked about making sure you're keeping up with the times. Like, coming from somebody that's been originating, in the 80s and doing this for 40 years, I was smiling because there's so many people I talk to. They're like, well, it's not just about the data and the science yet.
Oh,
I have someone like you saying 40 years of my work, I'm adapting too. I'm not going to be Blockbuster in this situation. Like, I'm going to be Netflix.
Right.
And so I just want to say that's where my smirk was coming from, because I talk to so many people that think opposite. Now, to answer your question from originators, I'm probably going to throw some people off with this, but I'm going to be honest. I'm at a place where I just don't care. It's accountability, and it's extreme accountability. My team, we set up our weeks, like, you tell me how many calls you're going to make. And you tell me, by the way, I'm not telling you, here's how many calls you should make. They're self-generated loan officers. Tell me, how many past clients do you plan on calling this week? Well, this many. Okay. Which ones are you going to call this week? And so getting them to turn that in. And then what I do is just extreme accountability. You're telling me that you should be doing this, but at the end of the week, you don't do this. I'm giving you the data to show you what you should be calling, why you should be calling. We leverage, for example, CoreLogic. We can see clients that are shopping for homes that were once closed with my company, but then now they're shopping for a house with somebody else. We didn't do the pre-approval. Hey, you have 4 of these this week. Let's role play that call together. Or let me know who you role play with so I can reach out and ask them how you did on that call. We got to get back to accountability. We have to. And people are sitting there, well, AI this, AI that. They want AI because we're not calling. We're not staying in front of these people. We know AI, I click a button, it's going to do exactly what I tell it to do. Exactly what I tell it to do. Companies are collecting call logs every week. What these call logs are, it's a bunch of data points, and it basically tells them how they can speak better to consumers leveraging AI. So we got to get a little old school here, Brian. And with technology, I believe we can go even harder with the accountability. We're in commission sales. I not become a loan officer and I'm sorry for those of you out there that get offended by it. I did not become a loan officer to not make 6 figures. I didn't. I'm sorry. I didn't. I start at 0 every month. It's time to make sure you're holding yourself accountable. And if you don't know how to do it, get somebody that can help you take it to the next level. Excuse my passion.
Faris, your view on this?
Yeah, I mean, I can agree more with Jonathon. I mean, extreme accountability is so key. I mean, we've got a coaching program we do weekly, and I find there's 2 things that if you do it, you'll never complain about money. One is lead tracker, really understanding where your leads are coming from, tracking it monthly, identifying the sources. If you got 30 leads from a referral party, but you only converted 1 or 2, what's going on? Is it the lead or is it your conversion, right?
And or do we even know what your conversion rate is, right? I find 85% of originators cannot tell me that number of what's the conversion from credit bureau pull to fund.
Yeah. And the reason that's important is, if you want to double your income, there's a simple formula. A lot of times we think we just need to double our leads.
No.
But if you just increase your leads by 25%, increase your conversions by 5%, and increase your margins or loan amounts by 25%, that literally will double your income.
Yes.
So that 5% conversion sounds small, but it has a huge impact on your business. So lead tracker is super important. And the second one, we call it the Spartan trackers. I went to Michigan State, so we have something called the Spartan tracker, but just making sure you keep your activities high. I love what Jonathon talked about, going old school, because I do think in this business, old school plus new school is going to dominate, but you got to have the foundation of doing the basics, which is having the conversations. If it's no more belly to belly, have the Zoom calls, have the roam calls, on one-on-one, get the thank you cards, remember people's birthdays, send them personalized gifts. Start doing events. I mean, that's what this business is about. It's still a people's business, but how do you take technology and optimize it and take it to the next level? That's where I think, to Jonathan's point, probably where you can use AI and use things just to enhance it, right? But you got to have the foundation.
Yeah, look, Jonathan, I'll go down the road because I don't run a mortgage company anymore. I've had 45,000 originators work for me through the years. And I think it's a myth of self-gen loan officers that somehow they can't or shouldn't be. People don't like the word managed. I prefer the word coached, right? I prefer the word optimized. And this is not a business. This is a business that has very thin margins. And if you can't optimize the folks working for you, I always ask originators, all the things you talked about, then they go, well, and I didn't do it. Is that because you're simply making way too freaking much money? Is that your problem? You got a tax issue maybe where you're making too much money, right? Because people constantly, I've seen $8 million originators sit literally in the cube next to $1 billion originator. They could simply learn through osmosis, but then you got to do it. You got to execute, right, in the process. So I'm a fan of managing up or out, right, in the process with minimum standards, particularly Faris. And both of you guys are entrepreneurs. You're investing in your tech stack. You're investing in data. You're investing in your sales management team. To the degree that people don't, I would tell you that companies slowly move to mediocrity without management and sales coaching aggressively. And companies that do it well, you talk to Ashant Banosian and talk to him about, he meets with his team 3 times a week. Everybody has a job. Everybody has a role. He holds them accountable. They hold him accountable. It's like an accountability confab every day in his operation. Shockingly, he does $1 billion a year. Shockingly, right? Jonathan, other thoughts in terms of optimization?
Yeah, I'm going to give you a quote. Jim Rohn, I'm a huge fan of Jim Rohn. He passed away in 2013, inspirational, motivational speaker. And I've been listening to him a lot over the last decade or so now. But here's this quote. He was talking to his mentor one day, and he said to his mentor, he said, if I had more money, I'd have a better plan. And his mentor replied and said, if you had a better plan, you'd have more money.
Right.
And so I've been thinking about that quote a lot. Right? Because I've met so many individuals that I just talking about someone today. They grew up sleeping on a cement bed in Nigeria. That's a true story. Now to see their life here, it's unbelievable what they've done. And they didn't have money. So you talked about optimization. I'd like to know about your plan with what you're going to do with the data that's put in front of you.
Right.
You have free tools, by the way. Now you have ChatGPT. So if someone's putting data in front of you, there's no excuse. Well, no one walked me through it. What do you mean no one walks you through it? What does that mean? There's so many tools at your disposal. So my challenge to all of you is this. If you want more money, how good is your plan? And do you have somebody dissecting it for you? Do you have somebody picking it apart, finding the flaws? That is where I would challenge a lot of loan officers right now.
Yeah, no doubt about it. Look, I have my offices filled with those kinds of sayings. And one of my favorite all time is that everybody wants to go to heaven. Nobody wants to die, right? Everybody wants things in life, but are typically unwilling to pay the price. Faris, I'm going to give you kind of the last comment here in terms of optimization thoughts to kind of wrap this up, and then we're gonna bring Grace in for some Q&A.
There's a Japanese proverb that says, water cuts through rocks, not by brute force, but by persistence. And, we always forget that, it's the small steps that we take on a consistent basis. Stay focused to the plan. Don't get distracted by shiny objects. And in order for you to execute on a plan, you need to have a compelling why. And I would probably invite everybody here, if you really want to execute on your plan and be laser focused, go deeper with your why, because that person in Nigeria, I guarantee you, he's got a big why.
Yeah.
And that's how he's going to kill it 100%. So, everything's got to come together.
So it's coaching, data, persistence, right? Having a plan, having a plan, right? Those with a bad plan will outdo those with no plan all day long, right? And if you're not coaching your team, or your team doesn't want to be coached, you got to understand, why are they on your team if they're not looking for your coaching? And you have an obligation as a leader, in my view, to provide that accountability and that coaching. Grace?
All right. Hello, everyone. Thank you. We're going to start Q&A. If you want to ask a question live, click the Ask a Question button under the stage. You will join a line, and the person next to the mic will be able to speak. Go back to the audience when you're done. And let's start with Dino's question from the chat. What do you guys think the future of the individual self-gen guy is versus the bigger companies spending millions on producing?
Faris?
So,
Or John, either one of you. Go ahead, Jonathan. You started. Go ahead.
Yeah. So here's my take on it. You're going to have to find your niche on where you want to be successful. It's you can't sit there and compare yourself to a company that has billions of dollars in a war chest. So you're not going to be able to target that specific audience. What I would say is, all right, where do you want to be? What does it look like for you to be comfortable, to live comfortably? And then how do you create an infrastructure, an ecosystem of people that are like-minded around your ideas and your philosophies when it comes to vision? Because, the agents I work with here in Michigan, they're really top producing agents. So they talk to me about lead flow and what they want and what they need. There are certain things I can provide and certain things that I can't. And I'm not going to be the right fit for everybody. What I'm not going to do is just sit there and go, oh, well, I'm not the right fit. I guess I got to figure something else out. No, here's what I offer. Here are my services. I believe we're a great fit because of XYZ. Yes, there are other companies out there spending millions and millions of dollars. And in return, the margins can be slightly higher, which means your consumers could pay more. No need to attack or take shots at people, but that is a reality, right? Into producing and bringing in lead flow, they got to make their money somehow or some way. So let's work on this relationship. Let's make it happen. Let's find our niche and build something together. And that's brought me a tremendous amount of success.
Faris?
I mean, we're still in a people business, I think technology and these big guys out there, we're like the speedboats. We can go deeper with the current people. We can actually learn about the problems and solve it, because that's where you're going to make the biggest impact, is when you really help someone solve a big issue. And, so while they're doing what they're doing, go deeper with the relationships and identify new opportunities. I mean, you got to be resourceful in this market, and you got to be resilient. End of the day, you got to invest in yourself and continue. You got to be a student. You got to be a student to master the craft. So I would just say that say the cores, go deeper, solve problems, add value, and good things will come. But don't get stagnant. Keep innovating, keep investing in yourself, and that's one way to stay relevant.
Let me just add two comments to this, if I could, and I'll, Jonathan, you mentioned my tenure in the business, so I'll give you a little sage perspective. Maybe it's just a function of being around for a long time. I'll tell you the originator that's in trouble. So maybe then you can do a self-assessment. The one who believes you can make 150, 175 basis points of commission and do fewer loans, and that's the path to the future. I think that I've never bought that philosophy. I think it's a foolish philosophy. For the simple reason that the more people you have in your database, the more people you have in your CRM, and the more loans you do over time, the better opportunity you have for ongoing referrals, additional business with those clients, whatever the case may be. Secondly, you now have 1 out of 6 mortgages controlled by the Rocket, Redfin, Mr. Cooper deal. I think it's going to be closer to 1 of 5, maybe 1 of 4. And oh, by the way, I'm aware of 2 deals similar to those that are in the process today. You could see a third or a half of the market go away with folks who make 20 to 40 basis points commission with really thin margins and great pricing and great execution. That's your competition. Complacency is the sin of all things. You cannot be complacent with what's going on when everything around you, everything in our business is changing. So if you don't think things are changing around you, you're not paying attention. And so the question becomes, how do you find your place in that environment? And what changes do you need to make to get ahead of the curve? Jonathan, anything you want to add to that? I can see you nodding.
No, it's just it's so spot on. A lot of when we talk to a lot of loan officers, what we don't understand a lot of is like the back end. We're seeing margins at the lowest they've been for these companies, and they figured it out. Like they did figure out how to operate on 30 net across the board. They are learning how to understand AI is getting cheaper, and you're spot on, Brian. Like It is so important that you understand that back end, and then building your book of business is where your referral sources are going to come from. If they can make the cost cheaper, right? These massive entities, and they can bring costs down and still spend on marketing, but can give the consumer something comparable to what you have, it is going to be hard for you. And I'm not saying that in a bad way, but to Brian's point, what are you doing? And I'm not saying combat it, you're not going to stop it, but what are you doing to make sure you can get yourself in that mix and receive a portion of that pie? You don't need a lot of it, but what are you going to do? What does your plan look like? That's why I was nodding my head on that.
Grace, do you have other questions in the queue or anything?
Yeah, there's one from Lexi. Anyone's welcome to come up to the Ask a Question button if you'd like to, but Lexi's got one, which is, what are some examples of tools that you all have adopted that have changed the way you plan your days and better leverage the data you have at your disposal? What can't you live without?
You know, for me, it's with AI, I mean, like having the predictive and the generative AI right now, and even just using it as a tool to brainstorm, create business plan, create GPTs to do your underwriting scenarios. I mean, create a 30-day social post. So for me, it's really learning how to maximize your time by learning AI really, really well. It's amazing with a short period of time how much efficiencies your team can create, especially if you start learning how to create GPTs that can solve a lot of issues for you.
Let me sound like a little bit of a shill for Rome. Look, one of the biggest challenges in the business in the last 3 or 4 years has been the remote nature of our business and to build culture and to stay connected to your people. I would just say a tool today. I mean, I've talked to a lot of my clients just saying you're out of your mind if you don't adopt this technology where you can bring people back together while remaining and gaining all the optimization of remote talent, where you can seek talent where it is and put it in your team, but it doesn't have to be 10 feet from you in the next office over, and still maintain that level of connectedness, or the ability to bring your referral sources into a theater environment like this once a week and just give them a quick update as to what's going on or help educate them on the tools that you have. Jonathan, your same question to you. What things have you adopted?
You know, one, I agree with the work from home situation, right? It's funny with Rome, it does help, like even jumping into the offices, the people love it. And it's honestly, what's cool is I work pretty late into the night. So my team will like post and they'll be like, wow, late night warrior, you know? So it does feel good from that perspective too. But the for me, the biggest thing right now has been ChatGPT, and really embody, like I spend at minimum an hour and a half to 2 hours a day just updating my GPT about me, like my day, how's it going, what's going on. And then what I do is like I create a bunch of threads, but in some of my threads, I have the people of influence that I love. So for example, I love critical thinkers. So I tell GPT to pull everything it knows about, Jordan Peterson, let's just say. And then I'll say, okay, take this article I have and pick it apart like you're Jordan Peterson, based off all the articles and the information you have online. It'll teach you to start becoming more impactful when you're making decisions. And that's where, for me, the benefit is coming from, is leveraging the data, leveraging the tools, using GPT. And this is an everyday occurrence for me. And then on Sunday, I take my calendar for the week because it knows me so well. I upload my calendar and then I say, what can I take off my plate? It'll ask me questions about my calendar. It'll say, hey, who's involved in this? Are you hosting? Who's doing XYZ? And I've built all of that stuff out. And then every Sunday I'm able to move and assess things accordingly and be able to walk into my week more proactive as opposed to reactive. So that's been a huge value add.
Look, I have a metaphor I use occasionally about T-Rex, Tyrannosaurus Rex, right? T-Rex ruled the world, top of the food chain for 300 million years. Have you seen one lately? Right? It went extinct. Why did it go extinct? Because everything in its environment changed, and it had a brain the size of a walnut and couldn't adapt. Don't be a T-Rex. Adapt. Right? You won't get it all right, but you'll be more right than you are wrong. John, I know you want to come back in.
I certainly do. I just want to thank all of you, Brian, Jonathan, Faris, just so the audience understands. I mean, these are huge thinkers with incredible experience that are so generous with their time and their thoughts. So can we give them all a big round of Remoji applause, please? There we go. Okay, cool. Great. I will let you guys get backstage. And Hugh, again, thanks so much. We're throwing their LinkedIn information in the chat. So please like them, follow them, love them, as we all do in Rome. And actually, so Faris, Jonathon, and Brian, you guys can just hit to backstage, and you guys will bounce over there. I did promise everybody a very special guest, right? Remember that? So here we go. I'm going to at least endeavor to bring this special guest to us. Let's see. Please welcome. All right. Let's see if this actually works. Live demos.
Whoa, what a good-looking crowd of mortgage leaders in the audience. How can I help you crush those compliance challenges today?
Mortgage Compliance Bot, thank you so much for being here. Yes, we have a beautiful audience. We also have a lot of loan originators in the audience. How could you help them?
I can assist loan originators by rapidly providing guidance on state-specific compliance, licensing requirements, consumer protection laws, and any updates in mortgage regulations. Whether it's California's Residential Mortgage Lending Act or Florida's Chapter 494, I'm here to help them navigate and stay compliant. How can I assist your loan originators today?
Well, actually, I was wondering if you could just, which state do you find generally the most restrictive?
New York tends to have more restrictive mortgage regulations, with detailed requirements for licensing, consumer protections, and servicing. The state mandates a single point of contact for borrowers in loss mitigation and has strict rules on escrow accounts and foreclosures. This complexity often makes New York one of the more challenging states for compliance.
Got it. Thank you. And I want to switch gears for a second here. I want to, do you have a sense of humor? Can you actually tell us a mortgage joke that's funny?
Sure. Here's one for you. Why did the mortgage broker always carry a pencil? In case they needed to draw up some interest.
Okay, Mortgage Bot, that's terrible. And yes, as penance, please remain quiet while I finish the rest of this. So I want to thank everybody for coming today. Obviously, we're having a ton of fun here, and I hope you learned something too. We also have a very special offer for you. Two of our founders are standing by right now to give you a 15-minute tour of Rome. If you join this tour, not only will you be amused, maybe dazzled by our founders, maybe our software, but we will also give you express VIP onboarding, which we usually charge $4,000 for free. So this is in addition to our 2-week free trial of Rome for your entire team. You are not going to want to miss this. I promise. It's fun. It's interesting. The link is in the chat. Just click it, and you too will see how Rome's Virtual HQ here is supercharging productivity and culture for mortgage teams, and importantly, allowing you to close loans faster and make more money. And on the tour, you may even get to ask questions of Mortgage Bot. Not bad. All right, so with that, again, I want to thank everybody for coming. If you'd like to take the tour, please click the link, and Mortgage Bot and I will see you on the tour, and we'll also see you next time for our mortgage event here at Rome. Thanks again for coming. We really appreciate it.
Thank you all. Looking forward to seeing you on the tour and at the next event. Have a great day.